Welcome back, folks. We get the S&P's record territory. You get to say that a lot this past year. In 2024, markets powering higher, and we kick off 2025 with another record price. S&P's up 46 points, or 0.7%, trading at 6130. To talk about some of the market action, folks, let's jump over to our man, Shawn Edwards. Shawn is Vice President and ETF Institutional Strategist with Direxion. And, man, we got some market action, as usual, when we have Shawn on. Shawn, good afternoon.
Hey, Tommy, good afternoon. How are you? Happy New Year also.
Happy New Year, man. You know, the expression is we live in interesting times, and it seems like that's always the case, though, right? As in, but not often do you get to say, a couple days into a new administration, we're catching news breaking, we have earnings season kicking off, but what do you think about this market, man?
No, absolutely. And to your point, we're coming off of one of the strongest two-year market rallies since the dot-com era, so we're seeing the S&P continue to march higher. And right now, we're in the midst of the fourth quarter earnings season. Analysts have projected the S&P to have earnings growth of roughly around 12% year over year. So we will see what opportunities present themselves. And I'm here to always, share those opportunities that I think some of the traders will find interesting.
I like it.
In particular, with the S&P 500. I think most of your listeners are familiar with our lineup and one of our flagship ETFs that gives exposure to the S&P 500. So I'm going to just spend a few minutes going through that flagship lineup that gives you exposure to the S&P 500. As I mentioned a little bit earlier, the S&P's coming off a nice rally. We'll see whether that continues, whether you're bullish or bearish. There are some opportunities in the market that present themselves. Our flagship fund, Tommy, you know it, SPXL. That's our 3X bull leverage ETF on the S&P 500. So for those traders who are bullish on the projections of the S&P 500, you can look at utilizing our 3X bull ETF. And again, that's ticker symbol SPXL. For those traders who are interested in utilizing leverage ETFs, obviously be mindful these are tactical short-term trading tools. If you don't want to manage the trading of a 3X product, you can look at our 2X bull leverage ETF on the S&P 500, and that ticker symbol is SPUU. So SPXL is a 3X bull ETF that gives you 300% exposure to the daily movements of the S&P 500, and ticker symbol SPUU gives you 2X exposure to the daily movements of the S&P 500. So those are for our bullish traders. For our bearish traders, you can look at ticker symbol SPXS, which is 3X the inverse of the S&P 500. So on a daily basis, if you're looking to, bet against the S&P 500, you can look at utilizing ticker symbol SPXS. And then if you want to simply hedge your broad U.S. equity exposure, you can look at utilizing ticker symbol SPDN, which is our inverse 1X bear ETF that gives you exposure to the S&P 500. I know a few ticker symbols to start us off, but I don't want to forget about our flagship funds there because they are giving you exposure to the S&P 500 at the beginning of the year. And to your point, a new administration, we're in the first month of the new year, so who knows what the market will bring. So these are just some tools to keep in your trading tool belt to begin the year.
I like it, man. I was jumping through those charts, and as you said, the last couple of years, just on the S&P, without the leverage, from 3,500 to 6,100, the leverage, my goodness, I mean, tripling some of those when you're pushing an S&P, even on a triple leverage S&P, to triple in price over a couple of years, pretty remarkable with what equities have done. And, you talked about earnings. Those are great numbers that the market is expecting, of course. We had some big movers today in terms of Netflix. I'm sure you saw some bang-out earnings, still up about 10%. We had the bank earnings that kicked things off. Gangbuster numbers, man. I saw the numbers. It was something like $100 billion the banks gave back between buybacks, dividends, just massive numbers, the banks pushing highs. Talk to us about banks. You guys have some outstanding products for banks as well.
No, absolutely, Tommy. The big banks have blown out their earnings. Look at the likes of JP Morgan, look at Bank of America, just to highlight. They led those gains. You saw their investment banking revenues in excess of 40% increasing. So I just want to take time to highlight two of our pairs. The first is going to be ticker symbol FAS and FAZ. So for those traders that are interested in trading the financials, you could look at this pair. It gives you exposure to the Financial Select Sector Index. Again, the ticker symbol is FAS, which is our 3X Bull ETF on that sector. And then FAZ, which is our inverse 3X Bear ETF on the Finance Select Sector Index. So the names that we all can think of off the top of our heads: JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, and even Berkshire Hathaway. So if you are interested in trading the financials, you could look at FAS and FAZ. And even furthermore, if you just think about our interest rate environment with the Fed looking to potentially cut rates further, we may see that financials still have a room to go. So again, opportunities here within the financials, and in particular, the Financial Select Sector Index. And if you are looking to trade the financials, again, those names that we mentioned earlier, you can look at ticker symbol FAS and FAZ.
I think it's so cool, man. I've talked about, to you in recent interviews, just in terms of how easy it is to trade a basket of equities sometimes with products like your own. I know, it's just, it's so cool in actions like this. It's amazing to think about. And I was jumping through the charts, JP Morgan, of course, and Jamie Dimon making some headlines today, as he does. We got Davos going on out there.
Yes.
But man, optimism for even the future at these prices, right? Like you talked about, the regulations, maybe what is on the forefront, how far they have to go. So we'll find out. And then, you talked about those earnings numbers. So what else do we have? We had healthcare out there today. We have you guys have so many outstanding, fabulous products. But I know Johnson & Johnson was out moving today. Always interesting in earnings season. But talk to me a little bit about healthcare. Not quite the same as the banks as I jump over to Johnson & Johnson charts.
Sure, absolutely. And before I pivot over to healthcare, I forgot to mention those traders that are still interested in the financials, but maybe not the big banks. You can look at our regional banks. Ticker symbol DPST. So to your point, Tommy, we have tools for traders, whatever their opinions are. So again, DPST gives you exposure to the S&P Regional Bank Select Industry Index. So those are our smaller regional banks. If the Fed does decide to cut interest rates, you can look at regional banks as an opportunity for trading. But to pivot back to healthcare, Tommy, to your point, Johnson & Johnson, they beat earnings estimates. So for those traders that are interested in healthcare and you're following Johnson & Johnson and you want to trade the short-term price movements in Johnson & Johnson, you can look at ticker symbol CURE. That's CURE. That's the Direxion Daily Healthcare Bull 3X ETF. In addition to Johnson & Johnson, we're looking at Abbott Labs. They reported earnings today, but they missed estimates. And so, again, we provide traders baskets through exposure to a basket of stocks through an index that you can trade whether you're bullish or bearish. And so, again, pure exposure to the Healthcare Select Sector Index, the 3X Bull ETF. So if you do want exposure to healthcare, you can look at CURE.
And man, those are some charts. We got a volatile market, which traders love, man. That chart of CURE, watch out, man. Volatility. Shawn, thank you so much for the time, for the update, man. We look forward to talking to you next month, okay?
Likewise, Tommy. Talk to you soon.
Take care.